trade is a very aggressive day that guarantees a reversal of about 50 to 100 pips minimum. Here's why. Okay, isn't this pattern not only the intraday pattern, but it sets the beginning stage for the week? Right? Back into consolidation. Vector 1, 2, 3 to the low. Morning star formation around the mayonnaise can be construed as a V bottom or a W, depending on how you want to look at that. Right past the mayo. Why would he come down past the mayo and close aggressively past the mayo and then snatch it right back in one bar? Because it works. Hey, Wayne. It works because when they close below that, there's two candles below this, right? A retail trader would sell here and here. Some people say, oh, on a break plus a close below the mayonnaise, I take it. Some people say when I get a full bar below the mayonnaise, I take it. Isn't that funny how he did both? He issued a break plus a close and a full bar below the mayonnaise. Then he immediately stalled the breaks for 15 minutes, and then 15 minutes later, everybody is freaking stuck because one bar took it all back. Do you see that? Do you understand? It snatched it away from the traders. Okay? Our entry is in here after the morning star formation comes back to the mayonnaise, or a bar later in here. That's okay. And this trade moves nicely in, then it bounces, and it does what it's supposed to do to finish out the day. 1, 2, 3 to the high, end the day and chop, and then drift back into consolidation. Okay? Then what does he do? He does exactly like he's supposed to because we knew it was coming. Vector, tiny 1, 2, 3 to the low, 3 swipes to the low, issues a hammer, snatches it away, comes right back with a second leg, and then this is your 33 trade. Okay? I'm going to explain to you the 33 trade. The last day of the 3-day cycle will issue 3 intraday levels of rise. Okay, write it down. Or mark the tape. Whatever works for you. The last day of the 3-day cycle will have 3 days of intraday rise. 3 levels of intraday rise. I messed that tape up. Let me do it one more time. The last day of the 3-day cycle will have 3 levels of intraday rise. Okay? With little stutter consolidations. 1, aggressive off the low. 2, 3. Hit the stops. Notice the pins turned over. See the pins on the top side? It's day 3. It looks like stairs, right? Stairway to heaven. Man, it's like stairs. I see it, Steve. Do I know if I'm in the right part of the cycle? What time of day is it? How's his behaviors? Are you at level 3 rise on the last day? This is called a 33 trade. The reversal is imminent. You can sell on the hammer back into the range. First target's the water, second target's the mayonnaise. I promise you'll get it. Almost every time. Why? Think about all this money everywhere in here, right? Market makers had to buy off of all the traders. They had to buy off of all the traders, buy off all the traders, buy off all the traders, buy off all the traders. Right? They're running out of cash. They're running out of money right now. It's getting a little low. The last day, the 33 trade, you ever heard of the term pump to dump? They're pumping the price on day 3 of the cycle to create, oh my gosh, look at this uptrend, I got to grab some of that. That mentality that is everywhere in the retail trader's world. Man, look at that euro. I'm so sorry I missed that. Buying, buying, buying. They pump the price to buy from the traders, become net short heavy at level 3, day 3, and then correct the price and come out net positive in their cycle. Market makers buy from the traders or sell to the traders on an aggregate with the last level of the cycle being the most aggressive and heavy buying or selling. That behavior allows them to come out of their longs or shorts in profit. Okay? So now, this is exactly what I just drew for you in my little sketch. It's going to be there over and over again. Can they reset back to the mayonnaise and continue up? Yes, because I don't know what the seasonal target is for Euro, and nobody else does except them. I don't know what the quarterly high is going to be in GBP. But I can tell you that at those price points, when it approaches the yearly high or quarterly high, a sucker takes a break of that long. And I'm going to show you in a chart coming up exactly what I mean. Okay? All right, so we're still good. We're understanding the trend, right? Here we go. Next slide. Identifying where you are in the count will simply help you project the next move. You've got to identify the peak formation to know how the cycle's anchored and where you are in it. If a double peak formation appears on a higher time frame, all I could say is lights out. You will make some money. Okay? Here's what I mean. Okay, this is the pound that took 3 months to set up. Okay, think about how crazy that is. 3 weeks, 3 months, all the threes in there. Look at the daily chart where it formed a high. Let me pull my pen. Here's the daily chart where it hit the high for the first time. That was the seasonal high. From September, October, November, right? It hit the high. It then had 3 levels of drop. And then it went back 3 levels of rise, and it came right back to the seasonal high. I promise you there's breakout traders that put their orders all up in here. They put big fat pendings. They were aware of this, and they went in there and they issued a big fat spike to the high and picked up those orders. Okay? They came near it again. Just so happened to be the Asian session where you're seeing this activity in here. Right here on the 15-minute. Have a looker. See it? Here's the 4-hour. November high holds. Market makers pinned it. They made the second leg of the M. There's the first pass on a 15-minute. Second pass on a 15-minute. Third pass on a 15-minute U.S. session. These guys are so freaking greedy because the bigger chart traders make up small institutions and hedge funds. They went back again because these guys were looking for the break. These guys were looking for the break on the daily above the high. You see how they went back 4 times, 3 times, once in London, or twice in London, once in the U.S., and once in Asia. Think about how crazy that is. If they pass up there 3 or 4 times, I told you, if they make that many passes at a price point, it's lights out. They made the swipes at the high all those times because there's a ton of money sitting there. Do you see the 1 hour is crystal clear? Yes. Look in here at the 1 hour. There's the pin to the high. Come near it again, miss it. Come near it again, miss it. Boom, boom, boom. And there's actually a little tiny more pass right in there. Notice the outside structure. The outside bar forms the high of the cycle, but none of the bars penetrated. That is a sell all day and twice on Sunday if the market's open. Okay? So understand. Boom, 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 game over. If you have an M formation on a larger time compression, such as this one, that took 3 months to form or 2 months to form, the correction's imminent, man. They will correct the chart to get paid. Okay? For 3 months, can you imagine this, man? Somebody took that break long at the railroad tracks in October, November, right? November 4th, that week. They were all happy. They probably thought they got a great breakout trade above the seasonal high. They were probably ready going to buy their wife a new Lexus for Christmas. They were all excited. Market makers snatched it away for 3 months right through Christmas and didn't come back until February. Man, if they were running a hedge fund, they had to open float for 3 months, had to pay swap every day. Do you know how crappy that is? I'm sure it ruined their Christmas. I'm sure they lost their bonus. Somebody was trapped long there. For them to come back to the level and pick up more orders 3 times. Yeah, somebody said she got a Hyundai instead of a Lexus. coal in her stocking. Don't you see how dirty this is? That's why the regular technicals don't work. The breakout traders break above the seasonal high, break below the seasonal high. If they break above the seasonal high, you got to still get the right signals in the formation. Trading above and below the seasonal highs is a sucker's game. Don't do it. Instead, look for it to settle in and make the counter and take it back towards the seasonal number. Okay? Like we did in this example. This was good for 150 pips minimum at the seasonal high, okay? Okay, so the trend. How do you figure out the trend? It's the anticipated directional move needs to line up with the peak formations. It begins after the stop hunt. After you see the stop hunt, aggressive move, vector candles to the high, it sets in, pulls back, goes again, that's the peak formation. That's the highest point on the chart. It could be the highest point on the chart for the week, and you also have the peak formations intraday, which is the V tops and V bottoms. The trend move in Forex lasts 6 to 8 hours. The directional move is slow and steady. It's with all their money committed. Obviously, if level 1 is identified, the trade's going to offer more pips and can be converted from a spot to a swing trade. Let's say you see a peak formation low and you get in something, it looks good, and you're jacked up, and you're like, man, I kind of like this trade, and you scroll back and look at the 1 hour chart, you notice, man, it's been dropping for about 3-4 days. It settled in, it chopped around, it made a second leg. That looks like a big multi-session W. You're up 50, 60 pips. Lift your take profit, adjust your stop to break even. Convert the spot trade to a swing. Not everybody is suited for that, and that's okay. If you're not, take your 50 and look for another setup tomorrow. If you are, and you want to start taking swing trades, that's okay. But understand the swing trade lasts 2 to 3 days max. That's why a lot of times these guys take swing trades on Monday and they hold it and they're up 200-300 pips and they move to break even and never trail. And then by the time Friday rolls around, they come right back to the same level and end the week for no net change. And they had a 250 pip open float positive and they end up with a +5 or +25. That, my friends, is a crime. Okay? I'll talk about how to handle the stop losses in all conditions. Okay, look. Will all the time frame always line up? No. This is a retail trader's trap. Don't get caught by the market maker, man. You sitting here waiting for the 1 hour, 4 hour, all that shit to line up, that's a retail trader's trap. Okay? All right, I hate to keep asking this, man, but can everyone hear me? Is it just certain people are falling off? Okay, sorry. All right, thanks, man. Okay, thank you, Mac. Thanks. Okay, thanks, guys. All right, look. You got to have an open mind and trade in both directions and not be afraid. If he shows you stop hunt high, you're a seller. If he shows you stop hunt low, you're a buyer. Just be cognizant of where the peak formed. How far away are you from the peak? Is there profit to get back to the peak if you trade against the anchor spot? Okay? That's how you handle the trend. Now, a market maker uptrend can be labeled as such. WVVM. The counter trend back towards the peak is ill-advised on V1. This is V1 right here. First day of the reversal. The straightaway trade occurs here most often. Okay, I'll show you a picture, don't worry. Okay, if you're writing the slide, I'll give it a second. This is an important slide, by the way. This is what I mean. Day 1 of the cycle, a big fat W comes in at the tracer. I expect a rise. The next day, they issue 2 pins to the low in the shadow box. My gosh, it couldn't be any perfect. Here's the low. They cut it in 3 swipes, vector to the low. They end on pins right here. They make their move up. This could actually be construed as a big W. That's okay here going into the session. But here's your stop hunt low. What do you expect? Day 2. All right, one more day of rise. I expect them to stop hunt low right out of the box and rise. VW, VVM. The reversal's imminent. There's the railroad tracks to the top side. There's level 3 chop, level 3 chop, level 3 behavior. I know it's coming. Okay, do you see? Market makers took their money back against the trend very aggressively, I might add too. Look at that. Look at these candles right here, man. Over, and you got out of that trade in minutes. Level 3 is the 3rd day of the rise and the chop. Okay. The market maker downtrend can be labeled as such, MAAW, only because I can't make an inverted V on typing. I don't know how to do it. If someone knows how to do it, email me. The counter trend is ill-advised.